Hello, Warriors. Let's have a good week. No, not good. Let's have a great week. So this is Dale Pinkert at TradeGateHub.com, and we're powered by TradeView Markets, the broker that try and find something you can't trade on their platform. So last Wednesday, I left you thinking that the ECB may do nothing, and that could set the stage for the low in euro. I talked about that there would be a stop hunt because we had a confirmed low here, and that if we made a new low after the ECB disappointed, it would not confirm. That is what's happening on our screen right now. Euro is not confirmed. Now, just because it hasn't confirmed, it still has to do something right. But let's talk a little bit about the stops. So, everyone had their stop, which I teach not to do, right under this swing low at 806, right? So when it got elected at 806 and went all the way down to 757, I actually bought it that day. I was a little early, but I used a wide stop, 100 pips stop, especially on a red event like news. So, I'm down about 20 pips right now on my long euro position. And we could try and test this again without confirming, but to me, it looks like we have at least a 2-drive formation here. And say, for example, you're stopped out at 108.05, and you felt pretty good that, oh, good, I'm glad I'm out of the way. He's broke another 40, 50 pips and, better out. And I've managed my risk on the trade. But, here we are back at that low at 108.04. So was this a classic sell the rumor, buy the fact that the ECB would not raise rates? And this was, besides the war in Ukraine, one of the more bearish events that could happen in the euro? You betcha. So, I mean, people are saying, how can the ECB do it when they're so far beyond behind the curve that they, didn't raise rates, and they're still doing QE, they're still buying assets, and yet, we're not collapsing. So, that's the first thing a market has to do when it's bottoming, is stop going down. And to me, it feels like downside momentum is waning, and it's not just an opinion. Here we are diverging, pretty glaring compared to the last daily low. So, let's drill down a little bit and see what happened on the 4-hour. Same scenario. In fact, we've been diverging even longer. We haven't confirmed a low since it looks like the 5th of April. So, you're talking about 2 weeks, and even with this smash. So I would say that this is going to be a real key area. The highs that failed in the last couple of weeks up here, use this blue line about 109.50. 108.50 will be your first sign that it's turning up, but back over this old support, new resistance line is going to be definitely a confirming signal to me that a bottom is in for at least a bear market rally that I think could carry us up to the 114 level. So even though everyone who is disappointed in the ECB, I don't trade the ECB. I trade the Euro USD. So I was looking for this kind of action. It manifested, and I'm long. I like the euro. One of the other things I mentioned for a sign of a bottom in the euro was that the euro could make a new low without the euro pound making a new low, which is exactly what happened. We took out the 78.6 level by a bit down here, but look how far off the low we are in EG. While euro was taking out the low from this day, EG wasn't. First time in a while, it speaks to euro's relative strength compared to cable. But cable also, even though it's not my preferred long, and euro is acting pretty good. We, during that last move up in the dollar, cable didn't make a new low. So actually we have a higher low. So it's leading me to, again, the supposition that we're in a topping pattern. This was the ECB. This was the candle in the dollar index, not making much upward progress here. I do believe that at least a correction is due. I know a lot of people are talking major top. I could see how this could turn into it. But you never know if you have a major top or a major bottom until you look back in the rearview mirror several weeks, several months, where you could believe it is, but time is what's going to confirm the major turn. But to look for the dollar to at first get back under this 99.40 level, that's going to be a big deal. A little shorter term, yeah, see, that's what we held here. We pulled back to, old resistance, new support. So most technicians are going to start getting on board back under par. And for sure, there's some stops here. So I see a lot of stop hunts in the dollar that could occur in the months ahead. I believe there are sell stops here for people that are playing it real tight. I believe there's sell stops here. So there's a lot of sell stops on the way down. The grand prize would be to take out these stops down here. So just a normal correction, 96 to 95. You could still call it a pullback in a bull market, but that's what I'm looking for. Now, the yen's been on a tear, and I have had a couple unsuccessful attempts at top picking this, and the daily is saying, look at all this momentum. But then you take it down and drill down to a 4-hour and look at this. So we are definitely diverging. I mean, I wouldn't take a diverging high here, and you could almost call it a little 3 drive happening. And I think a pullback to 25 is possible. If we get through that, why can't we see 21 again? And, that doesn't mean it's the beginning of a big bear market. But, let's face it, we straight line for 1,100 pips. Why can't we pull back 50%? And part of that pullback could be if yields are peaking. Here's a look at the 10-year. And the 10-year on the daily is diverging, but still a lot of momentum. But again, you break it down to the 4-hour, and the new highs and yields that we made today are not confirming. So why can't we have a pullback? This too has been a very directional move. Just like the yen, it's been a monster, and we've rallied pretty well from 170 to 280, so 110 bips. Why can't we pull back to 230, 240, 220? And that would have some negative impact on the yen. So looking for a top in the dollar still. I'm long the euro, I'm short yen, and I even took a stab at the gold market today. Last week when I was with you, I was short from the 1980 level, and that was here, and there was a $20 move. In fact, when I was on the air, we were already up 7 on the trade, and I always talk about taking partial profits. So that's all I took out of it. And attempting it again today, this still looks like we could have that this could be based upon the high we had at 2070, some type of failing rally. There's a lot of psychological resistance, and 61.8 just above 2000. So I think you have to give a tolerance with stops, say about 2010. And I still think there's a shot for some downside in gold. I'm not sure what the catalyst will be, but you wouldn't think that if the yen was going to come off and yields were going to decline, that would be bearish for gold. But, a lot of things are counterintuitive. This last gold move to the upside was in conjunction with a rallying US dollar yen and rising yields. So why can't the inverse happen here? Silver's still stronger than gold, not a ton, but again, this could be a failing rally. Gold silver ratio is kind of tough to call. I mean, it's been sideways since the December. So we've been in this formation. It's every time it tries to break down, it recovers. Every time it tries to break out, it comes off. But there's a lot of compression in this. I would say that if I'm right about another correction to the downside in precious metals, another sell-off, that it would most likely happen with the gold-silver ratio going up. and silver beginning to lead the way. There is talk about a squeeze coming up in some of the futures contract deliveries. It's all paper, but one day, and people have been talking about this for years, one day, people aren't just going to liquidate their future long contract. They're going to say, give it to me. And they're going to want to take delivery. And if that happens on a fairly large scale, that'll really test the market. I don't think it's going to turn out like what happened. I think it was the zinc market, one of the markets that basically stopped functioning. I think it was nickel on the LME, where they had to cancel trades. But it is being set up with a lot of hypothecation of silver trades done through paper, and it is a possibility it could happen. But for now, again, reestablish some short positions today, wrong over 2010 in the gold. We're still 18 bucks higher on the day. So, nothing wrong with what we're doing so far, unless you start looking at some shorter term charts that are diverging up here. Looking at the copper, had a little change of heart here yesterday, and think last week, and covered copper shorts. I think there's a shot that we could make a new high in copper, or 487, and talk to Mike about covering shorts in Freeport after this break. I would be looking to reestablish shorts at new highs over this double top if that happens. And the S&Ps have turned positive. Okay, so a lot of people are talking about potential head and shoulders formation. Mike posted something in our main chat. What a great source of content. And I think I saw it from a few other people on Twitter, that sentiment on the AAII sentiment survey is the most bearish ever since 1992 or 1993. So you have a lot of bearishness with a market that's not even making new lows, but is just pulling back here. And I wouldn't be short in that environment. If I wanted to be short, I would wait for some type of rally. And the only thing that I want to wait for is, I think the semis are going to be an important ingredient for turning the market around. We don't want the market just rallying on the miners and the oils. So down here around 228, we'd have a nice 3 drive to a bottom formation in the semis. And I think this is something that has to work or recover for me to want to play the long side. And I have to be patient and see what happens down here. As far as the oil is concerned, last week I warned about not being short down here, that we were at support. And I said the next rally is going to really tell the tale. And I was talking about this rally that we had off the same support level around 94 bucks. And it was pretty sharp and pretty directional, and got it all done in about 5 days, right? And that was a pretty good rally, $20 rally we had from that level. So now we're into 1, 2, 3, 4. So we have a couple of days left to see if it could reach the magnitude that this did. And I'm guessing it won't. I'm thinking maybe 111. So the rally off the support level is weaker this time, at least I believe it's going to be, than it was here. And next time down will be the third time down. You could call this a descending triangle. And it measures 35 bucks, and that gives you 60 on a breakdown. So I know a lot of people don't think that could happen, with the possibility of Europe deciding to boycott Russian oil. But I'm just trading a chart. It's a descending triangle. And maybe to fill out the triangle, we need, one more failing rally. But you know what? If you're a energy bull, let me just warn you about something, because it could be a one mistake business sometimes, right? So you don't want to be long if we take out this level. Okay, right here. You could be long above it. I wouldn't be long underneath it. I think we could see a pretty sharp break to 80 in a hurry on a breakdown. Still plenty of oil bulls. And I know it's hard to take a short position in oil where you could get really clobbered overnight with some news. But, I think that this peak may be in for this cycle. So I may look for shorting opportunities up here around 110, 111 if offered sometime this week. So that's my take on the energy market. My take on what's happening in yields is something I talked about that will also kind of tie in. Here's a TLT. I thought we were going to start turning up right around here, around 130. This is, really a bloodbath across the board. We're having some type of sovereign bond crisis because the Fed. We were wondering, who was going to be the buyer to come in and step in when the Fed stepped away. Well, the answer is not many, at least not enough to absorb the selling of people's fear of inflation and higher rates. I'm sure there's going to be a tear your face off bear market rally here. Could begin sometime this week, but I see nothing technically here on the daily. Maybe shorter term, we're getting some divergences, starting to get some on the 4-hour, starting to possibly get some on the 2-hour. If you're short, take it. All I could say is, if you rode this bond wave down, being short bonds and notes, at this stage, you're either naive or greedy if you haven't taken any profits. So that's really the way I'm seeing the market this week. I mean, it is kind of quiet. Europe is still celebrating Easter, but a couple of things that I'm doing is, short yen, risking about 70 pips, and long euro down about 20, looking to add on. Short gold, wrong over 2010, getting a nice little reversal candle there. And looking to buy semis if we get one more washout this week, down towards a 3 drive to a bottom formation. Thinking yields are peaking here. And Mike will be with you in an hour and 14 minutes. Also, we have a great guest lined up on Thursday. I'm not going to tell you who it is yet. I hope that what we're doing is helping you guys accomplish what is a difficult endeavor of being a trader and adding value, and hope it's not just the forecasts and the calls that are helping you, but you're learning about why I make some market decisions based upon RSI and stop hunts and the things that I talk about every day. You can use these videos and go back to them and learn from them, and they can be a teaching tool. And if you're feeling like you're alone out there and you'd like to collaborate, I recommend you come into our main chat anytime. You could also come in when we're streaming to ask us questions live. We encourage that, and want to wish everyone a great trading week ahead, and tune in for Michael Venezia in an hour and 13 minutes. And definitely tune in tomorrow when Mike and I go off on our tangents, and every once in a while a pearl of wisdom comes out that you guys could string on a necklace. So good hunting the rest of the day. I'll be back here tomorrow at 11 a.m. with Mike for our weekly market macro talk and specific equities that Mike is focused on. Also, tune in because Mike has curated his Twitter list again that he's offering people to be able to see. It would take you years to find out who was right to follow, who was good to follow, if you were just developing your own list from scratch. So let us save you some time and add some credibility to who you're following on Twitter. So that's it, everyone. Remember what I say, don't just count your pips, count your blessings. And we'll see if the euro can turn this week to the upside. See if the yen could correct back to the downside with yields, and see if I'm going to be right with the whole street bullish precious metals that there could still be a decent break coming. And I'm not talking about like $20 like last week, greater magnitude. Good hunting, and join us in tradegatehub.com. Visit TradeView Markets. Take a look at every instrument you could trade there. Good luck, everyone. Have a great day.